Good evening, everyone. Welcome to Hit the Bids Week 20 commentary. Going to be taking a look back at our prior week's action, see what unfolded, and how it's going to help us navigate these markets going into Week 20 here. So let's jump right in and get us started with our live cattle. As we discussed on Thursday, we are seeing volume roll out of this June contract and into August. As we start to see this volume lighten up in June, we are going to be kicking that one off the back and focusing primarily on August going forward here. It's going to be the new front month, and as we start to see all that volume roll over into August here, so that's going to be our focus now. So first up is our August live cattle. Last week we did get a nice gap open higher early in the week. Had some good news the prior weekend. Price just balancing out on Monday and Tuesday before getting a brief climax day on Wednesday where we saw a nice squeeze higher up to new all-time highs. Those prices weren't very sustainable. We ran out of buyers in a hurry, and we did see price get rejected, engulfing those prior 2 days of range. This big volume sell-off day on Wednesday was kind of a key sign that the pullback was underway. We did see some of that selling momentum carry into Thursday, pushing down and closing on the lows before we saw price just pause here at the 20-day moving average on Friday to close the week. This was a good sign as we saw support step in here at the 20. The fact that we didn't just slice right through it and keep on selling is a sign that the bulls are still alive and well and showing their strength in a very strong market here. The fact that they're supporting this market at the 20 could mean that we could have rallies come from here early in the week. If we take a look on our lower time frame, there is a pretty wide distribution here across that Thursday and Friday's range. No real strong point of control here in this market, so that makes me believe that we could have just a little bit more downside. Nothing major, just a little bit more of a pullback, a little deeper pullback back to this 204 area, give or take 75 cents. This is going to be the spot we're going to be looking for good support as we see these prior swing highs as well as this demand zone from the middle of the rally here. This is going to be a spot where I think buyers will become active. But we could see dips all the way down to this 201 half area at the 50-day moving average, which is this blue line. Anytime, as long as we have price above this 50-day moving average, we will be remaining bullish on this live cattle market. Be expecting dips to be bought up going into the week ahead. With this pause day on Friday, if we start to get early bids above 207.35 here, we could see a nice just hit and run rally week. But we'll just have to play wait and see here on Monday, as I do expect a little bit more of a deeper pullback to come down into between these averages. But price doesn't lie, so if we get those early bids above our bull pivot, be ready for the bulls to just hit and run and carry this thing back higher as this market remains strong, and as long as we're seeing support at this 20-day moving average, this market will continue to prove its strength. So be patient early in the week. If we get a nice rally to start us off, we could have some momentum early, but I would like to see a little bit better discount and a little bit more of a value play down here near 204 on this August contract. We go down the line into late 2025 and even these early 2026 contracts. We are seeing support step in at these key moving averages, which is exactly what we want to see in a pullback in a big picture uptrend. If we're seeing support down the line here, I think this market's got some legs in it to go higher again. This is just a pullback in a big picture uptrend. This dip will definitely be bought up here in the near term. Same story over in those feeders. We did get that gap and run higher early in the week before pausing and reversing on Wednesday. Also saw that Friday pause day on at this 20-day moving average. Good supportive action there, showing the bulls are still ready to support this market. Same story if we get early bids above Friday's high. Coming into the week, we could just see that hit and run and momentum play just carry us back up towards those all-time highs. However, I also think that this market could use a little bit deeper of a pullback. The last few dips have gone down to this 50-day moving average and even undercut it in some extreme examples. But so a little bit deeper of a value play, offering a little bit better discount down here in the low 290s would be a good spot to be ready to get long in this big picture uptrend and expect those bulls to carry this market higher going forward. As we go down the line into those late 2025 and even early 2026 months, we are seeing good support at the moving averages, 20-day moving average here across some of these back months. So be ready for this dip to be bought up. Just could take a little bit more time for it to unfold, but if we get those early bids above that Friday's high, we could just see this market pick back up right where it left off and continue higher. So bullish across the cattle market as we have been for weeks. Let's jump over to the corn market now. Last week was kind of a choppy week with a little bit of a bearish lean to it. We did get that early breakdown in the week with prices putting in the entire week's range across Monday and Tuesday's action. We did see a brief rally attempt late in the week, but just couldn't quite get any traction above that 450 mark, which has been our kind of our pivot / line in the sand here in this corn market. Below 450 remain bearish, and the bulls are struggling to get any traction above that. The bears continue just to keep pushing this market lower. We did get a little bit of support at this demand zone that's dating back to October, November of last year. We did see that support step in middle of the week, pushing this thing back, but be ready for the bears to attack that zone once again coming into the week. And if we're able to break that prior week's low at 436, we could really see the selling kick in and push this market back down towards these contract lows or prior year lows at 420. Be ready for more downside to come in this corn market. Next up is our crude oil market. Last week we saw an early pullback to that 50-day moving average. We did just run right up to it and immediately reverse, showing the bears are still in control of this market and showing there's plenty of resistance at this 50-day moving average. That initial break back down to the middle of this 55 to 65 range wasted no time after that bounce off the 50. We did see a pause day on Friday here as well as price just chopped back and forth around that 20-day moving average. This could be partly due to this crude oil market rolling from June into the July contract. So be ready for more downside to continue as we do have that volume trading in July now. Look for any offers below 60.78 early in the week, which is Friday's low, to drive this market back down into the mid-50s. Bears are going to be looking to attack that 55 mark going forward, as we have seen good support there over the last month. But the bears want to keep pressing this market lower. Seems like this market wants lower oil prices, so be ready for continued attacks on that 55 level. Below there could really open the door to continued selling and really get oil cheapened up. So now over to the equity markets. Each of our indexes saw a pretty decent rally over the last week, so they continue to push back and reclaim some of these prior levels and some of our key moving averages. The S&P just hit and ran this week, opening up on Monday and pressing higher up above 5,900. Good psychological level, reclaiming some of these prior lows we saw late in 2024 and early this year. The fact that we were able to reclaim some of those and cut right through this line that we broke down from back in late February, early March is just showing a good sign of strength from the bulls here. This market has had about the same as that cattle market, about a 4 or 5 week rally here, where we've gone from a little over 1,000-point rally. So the buyers could be running out of gas, be getting a little tired here. Could be time for a pause or even a pullback. If we do start to see offers below 5,900, that could start a pullback, get that underway. But I would be expecting these rising 20 and 50-day moving averages as they start climbing up into this area. Any dips to be bought up and find support at these key moving averages should be a pretty good buying opportunity for a potential power trend that is in play to finish out Q2 here. This market has cleared a lot of these levels, like I said, so it should be pretty smooth sailing. I think there's always headline risk, but we are starting to see a lot of that volatility die down, these ranges getting tighter. So that's just kind of a sign of a boring bull market. If we do see that pullback, be ready to buy some dips, find some cheap stocks, good discounts that we've seen over the last couple months here, and be ready for a good power trend going into the rest of this Q2 and into the summer here. So that's all we got for tonight. Good luck this week, Everyone have a good evening.